Well, hello, my name is Loren Francis, and I'm from Highview Financial Group. At Highview, we have a keen interest in impact investing, and we're here today to talk about the Rally Total Impact Fund with Mark Foran, and also one of the investments in the fund, Area 1, and that is with Joelle Faulkner. So I'm going to start by sort of turning it over to Mark and ask Mark if you could define for us what impact investing actually means.
Impact investing is a form of investing where one is looking to generate a positive social or environmental outcome alongside generating an investment return, and that would be a market rate or better return.
Maybe you can talk to us a little bit about the Rally Total Impact Fund, which in complete transparency, Highview Financial is an investor in. But just tell us a little bit about the makeup of the fund and what makes it different from, investing just in an ESG type of a fund.
ESG is certainly a very popular form of investing, but it really invests in looking at ESG factors as a form of risk. And so that risk then is to the shareholders. So essentially looking at how does the events of environment, social, and government from the world affect investment returns. The difference there is it's not necessarily looking at the outcomes or the positive impacts the other way around of the investment on the world. It's looking at it from a shareholder-centric standpoint. And impact is incorporating that, but then going beyond, as mentioned before, also considering what is that investment doing to improve the environment or the social equity within the world. And so within the Total Impact Fund at Rally, and we use the word total quite intentionally, we're looking to generate very holistic impact alongside an investment return. And so what do I mean by impact? Our framework for that really is the United Nations Sustainable Development Goals, or SDGs. They've really become the language of impact investing. And all 17 of them and the 160 plus areas underneath that many people aren't aware of really do a great job of outlining the very necessary impact that needs to be generated in the world. And so we are looking to, in our fund, provide impact that covers all the SDGs, so the totality of the SDGs. We're doing that also on a global basis because frankly, the problems that we have in the world are global indeed. And so we are looking at all regions. And the final aspect of total for us in the fund is we're doing so across all asset classes. And I think investors might find it interesting to know that when we say all asset classes, we don't just mean public equities and bonds like a traditional balance fund. We have 35% of the holdings in private investments, which are very deep and very intentional within their impact.
Maybe Joelle, you could give us just sort of a couple comments on how you feel impact resonates and what impact means to you.
Area 1 Farms invests in Canadian farmland in partnership with Canadian farmers and operates those farms. And we're really focused on the environmental outcomes associated with farming, and in particular, kind of how we can migrate in an at-scale system through to regenerative production, which is the idea of capturing more carbon. And then also how we're affecting the local communities. So the social aspect of being able to ensure continued kind of intergenerational success of Canadian farmers. And then Canada exports most of its food. So when you think about what we're doing and what we're growing, it's really trying to impact from an SDG perspective, the no poverty, no hunger globally.
Very interesting. And can you tell us too a little bit about how you work with Canadian farmers and how they might find you as well?
Most of our farmers find us through either referral or internet search. Like they generally find us because most people who invest in farmland actually buy land and rent it to a farmer. So they're a competitive buyer, but we don't. We look for farmers who are wanting to expand rather than those who are wanting to sell. And we buy in partnership with those expanding farmers. So they put in money, we put in money, we buy together. And then we operate together. And we work right now between Ontario and Alberta.
What are some of the challenges that our Canadian farmers are facing, in particular, one, yes, to capital, but two, also in terms of climate change effects that are happening?
Climate change, we always talk about in Canada, we're probably, compared to other growing geographies, net beneficiaries. Like probably over time, we become a little more hospitable to plant growth with climate change. The downside for us, the same as for everyone, is, and you'll be noticing this too across other kind of investments in your life, is the increased volatility is really bad for everyone. It is bad for Canadian farmers. It is bad across global producers. It's really hard to manage. And those things are getting, it seems like, more common and worse. And so our farmers struggle with and try to manage that risk. From a perspective of kind of what they look to us for, originally it was just capital. We've actually have now enough farmers and have gotten good enough at understanding the different operations to start spreading best practices between them. And I think that'll grow over time. And I think, especially as the world looks to agriculture to be a place that kind of curbs climate change through sequestration of carbon in soil, the practices are going to change a lot. And we look forward to being able to help our farmers adapt to those kind of changing needs.
You know, in terms of thinking about where does Canadian farmland sort of fit in the global picture, if you were to sort of say, you know, the practices that we're putting in place today, and you know, what role is it going to play in feeding the world? Is it something that's going to stay static, or do you think it's something that's going to be even more important down the road?
I think Canada is increasingly important. I think as we think about climate change and what that means for the globe, crop production is harder. We are moving into uncharted times and differences that we haven't exactly designed for. So we're not really good at designing for drought resistancy, for example. Canada has a lot of land mass, and it doesn't have a lot of people, and it has a fair bit of efficiency within the system. And so the idea that Canadians can continue to produce a lot of the global food supply, I think, is a really important part of our place in the world, and is a thing that we are very much interested in helping achieve.
I have another question for Joelle, and just in terms of where we're going moving forward with agriculture with respect to, one, carbon emissions, and two, water pollution, because those have been two aspects that a lot of people talk about when it comes to agriculture. And I would love to hear your thoughts just on those two things.
So I have a slightly unconventional view, both kind of as it relates to, like, so if you think of where investors might be in terms of expectations, or the general public, and if you think of where farmers might be, I am probably somewhere between the two, which means not a totally shared view at the moment with either. So I'll just explain kind of why and what we think. Farming, because of the food aspect, and because I take the view that we actually need to feed the world, is probably going to adapt a little more slowly than we would want it to, right? So on an investor standpoint or public standpoint, we want to cut emissions to zero immediately, and we would want to be able to sequester carbon in the soil immediately. And what the struggle there is, those two things, so both emitting carbon is a current part of how you farm. So tractors and combines take fuel. And even if you could switch that all to battery, you still have to transport the grain, and it still has to get to somebody, and you still need fertilizer products that are often hydrocarbon based. So I think to think that we could immediately switch it is probably out of realm. That said, from an agricultural standpoint, to essentially say like, hey, don't put pressure on us, I think that's probably also already outdated, in that the practices that we have developed to date around agriculture, which include kind of a big reliance on synthetic fertilizers, are probably somewhat outdated. meaning if you can achieve the same thing with less fertilizer, which is a big hydrocarbon use, so specifically nitrogen, every farmer would want to do it because it would bring their costs down and it could potentially increase productivity. And both those things are exactly in the farmer's interest. But the practices are not yet well developed. And what we often don't think about is the systems that kind of support agriculture and current practices also need to migrate in order for new approaches to work. So specifically, I think the movement of people to see good as not organic anymore, but regenerative is a really good first step, because organic requires a lot of tillage for weed control, which actually emits carbon then into the atmosphere and has soil erosion problems and a bunch of problems that the farmers never wanted to do, but kind of the general public saw that as this primary good. The shift of that to regenerative is super positive, because regenerative is the idea of not just focusing on soil chemistry, but also on biology. And what we all know, and the data super strongly supports, is the higher your carbon levels in the soil, the more efficient and resilient that soil can be, because it supports a bunch of biology and it makes it more regenerative, which you can just tag to more resilient. It holds more water, it holds more nutrients, it has all kinds of great aspects. So my view is within the next 10 years, we will transform from being primarily a synthetic-based production system to largely a regenerative kind of system. And the thing that's unknown is where on the scale is that? On one hand, you could use zero synthetics and you could use zero kind of additives. And that would be really good, but we probably couldn't keep up the yields that we require to feed the world. On the other side, you could use everything we're using and not change practices at all. And that is both problematic from a climate perspective and really expensive from a farmer perspective. So my view and kind of the approach we're taking and trying to support is, how do we find the practices that we can actually scale that both increase productivity and decrease cost, making them economically desirable to farmers, and at the same time are decreasing carbon output. So I think that's the big revolution coming, and I think Canada's actually in a really good place to be a leader in that.
I think one of the interesting things about your journey and the fund that we've invested in with you, Fund 4 for Area 1, has been the evolution of impact from when you initially started Fund 1 and started just putting in really good and proper practices for farmers, and again, using that partnership model, and actually seeing that impact and returns could be blended, and then putting that with more intentionality as each successive fund came. So wondering if you just talk about the impact journey as it pertains to the asset class, your approach to it, and maybe some other impact areas that go beyond the climate change and natural capital perspective.
The impact journey for us, so our starting point was that investors will actually do better by working directly with farmers and by giving more back to those farmers than any other model contemplated. So our starting point was one where we actually share appreciation with the farm partner above and beyond their equity interest. So they co-own with us, they get all the income and appreciation on the part they own, just like any other partner would. And then in addition, they earn part of the income and appreciation on all the assets that we actually paid to buy, so on our investment. What that means is they have more income and more of the appreciation in the asset itself, which means more of the wealth stays local. The other big positive outcome that we realized, but I don't think I appreciated quite how big it was, is when you think of ESG, that governance piece is really important. So who is making decisions and how are those being made in ways that support good environmental and good social outcomes? And because of our model, the farm partner makes most of the decisions. And as it happens, local decisions are better decisions across both environmental and social measures. So if you think back to kind of where we saw really good social outcomes get made, it was in Ford and Hershey. And it was in these company towns where the owners lived alongside their employees. And for farms, that is the case. So while we are trying to capitalize farmers for growth, we actually want the decisions to stay really local, because in our journey, we have realized that's actually a really good way of making sure you get good kind of best practice outcomes on the other aspects.
Well, it was wonderful speaking with both of you today. Thank you.